with PayFacs, you have to eat the cost of processing. Not everyone does that. They do pass it on, but it's against Mastercard and Visa regulations. So if you're with someone, 3, 4, 5, even 10 years, people are shocked at what they're currently paying versus what they originally signed up for.
With me today is Matt Robertson. He's the CEO of M&M Merchant Services with 30 plus years of merchant service experience, providing tailored credit card and payment solutions to drive cost savings and streamline operations. Today we'll talk a lot about merchant services, what are the options, things that we might think are real, but we have kind of a different perspective on some of these things that Matt will help us share and kind of go through those processes together. Now, Matt, how are you feeling today?
I'm great. How are you?
Doing fantastic. Now, first of all, tell me, how did you start this process? Where did you start and how did you end up where you are today?
Sure. I actually graduated college in 1995. Got a job, was traveling a lot for my first job out of school, was just looking at other sales opportunities. Responded to a local company and interviewed, started part-time, not sure if it was something that would work for me. And here we are almost 30 years later, still selling merchant services and actually now owning my own company.
What was the moment when you were like, you know what, I want to start my own company? Was there anything that was leading up to it, or was it like one moment, one decision?
I had been doing it a long time. Things had changed a lot in the industry. We originally had a sales office we worked out of, would book and go to appointments from there. They decided that they didn't want to do that anymore. They wanted us to work out of home. I had young kids, so I decided, I needed an office. Got an office, was still working with them, and at that point just decided it was time to make the transition. I had been doing it a long time. At this point, I had been in the industry for about 15, 16 years, and it was just the next phase in this. And I was paying all my own fees, doing everything myself, bringing in my own business. Had a lot of contacts from the years I was doing it. And it was just time to really move to the next step.
So you said you were doing it for around 16 years when you started your own business. When you started the process, what are the first differences you noticed between an employee and running your own business?
In this industry, I wasn't an employee. I was a 1099, independent contractor. So it wasn't like we were employed. We didn't have to work any hours. The only difference was, having someone that you worked with and reported to on what you were doing day to day. That was really the biggest difference. I've always kind of felt like I've run my own company, brought in my own business and, built things through my connections. So there wasn't a huge change going from working with another office to actually opening my own office.
Now, when you started your own office, when you started your own business, when we talk about merchant services, what has changed since then and when we're looking at right now in 2025?
There's been a lot of changes in the industry. One of the biggest changes we've noticed, is convenience, mobile processing, making it available anywhere through cell phones or cell-based terminals, things like that. That's one of the biggest changes I've seen in the industry. The other thing I really noticed was companies coming in. PayPal has been around a long time, and they were the original PayFac. But companies like Square, Stripe come in, and industries like Amazon bringing in their own payments and handling processing themselves. But what people don't realize, or what the biggest difference is between a PayFac and a traditional processor. What is the difference between getting an account? How do they actually underwrite the account? And how to support work through Stripe and PayPal versus traditional processors? What are the benefits of both? It's really changed the industry. People all want convenience and they want easy, but easy isn't always the best way to run your business.
So let's talk a little bit more about that. What is the difference between a PayFac and payment processor, like the difference between PayPal, Stripe, Square, and payment processors?
Sure. So with a traditional merchant account company, you actually get registered with Mastercard and Visa. You're approved under a specific MCC code, merchant classification code. So they know exactly what you're doing for your business. They underwrite that account based on industry type, based on volume, average ticket. How do you take your transactions, whether it's retail, online, transactions. So there's a full underwriting process that goes along with doing a personal background check, credit check. They're really digging into the business. And for high volume accounts, they're going to ask for financial information, whether it be bank statements, processing statements, financial, tax filings, things to make sure that the company is a healthy company. They need to, mitigate risk in the industry. So they do that by doing the full underwriting. People don't understand where a processor takes risk in the industry. If a company gets approved and processes transactions, there are risks of chargebacks, risks of losses for that processor that most companies don't realize. So once a company processes a transaction, that transaction from the date of either the product being delivered or the service being rendered has a risk of a chargeback coming in up to 6 months after the date of the product being delivered or the service being actually completed. So if a business takes all those transactions and either goes out of business, doesn't provide those services, chargebacks can come in. Chargebacks are, the bank that issues the card, gets their money back from the processor immediately. So they go in, take the money out. The processor now has to recoup that money from its customers. If the money's not in the bank or the company goes out of business, the processor is left holding the risk of all the chargebacks for those transactions. So that's why they underwrite the account, and that's why they go through the full due diligence to make sure that the company is financially stable to cover those transactions. With a PayFac, they don't do a full underwriting. When you sign up for Square or Stripe or even PayPal, they do a background check, criminal check. They make sure that there are no reasons that they wouldn't want to approve your account. They might look at the industry you're in, but the account is added to their master account. So you're not registered under a specific classification code. You go on to one master merchant account that they have already established and process through them. Well, what happens is if you go above a certain volume or something else triggers a full underwriting of that account after it's processing, that's when these companies actually look at what you're doing. And those processes of doing that full underwriting can take anywhere from a couple days to potentially months for them to get through their due diligence. And in that meantime, all that money you've processed that hasn't been deposited gets held. And you have no one to talk to. Everything's done through email. So there's just a lot of misunderstanding of why this happens and why it's different than a traditional account. And, so they're not doing their full due diligence with that initial approval.
So it sounds like the underwriting is one of the most important part in the process, and a payment processor takes the risk because of that 6 months chargeback that could happen. So it's a different process where PayPal, Stripe, Square, it's a master account, everything goes through that account. But if something triggers an underwriting to happen, you could be paused from 2 days to months and very little opportunity to talk with.
Or not get through the approval, right? Like they could look at the account, they could look at what you're selling. There might be something in there that they're not happy with, and they can terminate that account at any point. And if they do that, any money that hasn't been deposited from sales that are already taken is held until they feel the risk is no longer there on that account. Chargebacks, whatever risk they believe is there for them for potential losses. So those funds can be held 6, 7, 8 months, depending on if it's a product or service that was sold. So when they do their due diligence, if you don't pass it and they close you, you're not getting that money released until they feel that their risk is fully gone.
Understand. Now, when we're talking about going with someone that is a payment processor, there is a process for underwriting. You have to submit a lot of documents to make sure everything is proper and everything is good. What are
Yes.
some of the benefits? Let's say someone says, "Great, I know the benefits of PayPal, Stripe, Square." What are some of the benefits of going with the payment processor or switching to a payment processor?
So there are a few. One of the biggest ones is how fast your money gets deposited. With PayFacs, typically it's anywhere from 2 to 5 days to get your money. And even with companies like PayPal, that money sits in PayPal until you request it. So it's not even deposited into your account until you go in and actually request that the funds be transferred. So the amount of time it takes for you to get paid with traditional processors, most do next day funding. Worst case, if it's a high risk account or a reason that they won't do next day funding, they would deposit the money in 2 days. So your funds come in faster. You have more control over the rates. With PayFacs, they do everything on flat rate pricing, so they charge you a higher rate because they need to encompass all the interchange fees into one category. And then, they also charge more when you key versus swipe. And then if you want, your funds faster, they charge you additional fees. Or if you need additional security features, it's a la carte, right? So all these fees start adding up as you add more and more services that they offer. With traditional, that's all encompassed in the original pricing. The other thing that's really a big difference is with PayFacs, you have to eat the cost of processing. Not everyone does that. They do pass it on, but it's against Mastercard and Visa regulations unless you're actually registered to pass the fee on. So there's a couple different programs that traditional processors offer. They offer surcharging programs, which is on credit card only. You're registered with Mastercard and Visa, and it's capped at a certain percentage that you can charge on that surcharge fee. And it cannot be run on non-PIN based debit cards. But there's also programs that allow you to offer dual pricing. So you would be able to offer one cash and one credit price, which would cover the cost of the processing fees. So you would make the same money whether you sold the product and you took cash or you took credit. Those are not offered through PayFacs. And if you do it on your own and you get caught, or Mastercard and Visa finds out, they can either fine or close your account for not following their rules and regulations.
So when we talk about passing the cost to the clients from let's say a Stripe invoice, how does that look like? Like the fee, the business includes the fee in the final cost and sends it, and then carves out for the percentage, or how would they cover it?
So with a PayFac, it's not allowed, right? They don't have programs. What Mastercard and Visa's regulations state is if you are going to get set up with some type of surcharge program, whether it's dual pricing or actual surcharging, that it's a one-off. Whatever you charge the customers, what you're billed from the processor, you cannot profit from that. So when you look at rates in our industry, it's not just percentages, there are also transaction fees. So let's say Stripe or Square charges 2.8% for a swipe transaction. There's also a transaction fee of 10, 15, 20 cents that's added. So there's no way to actually pass on the cost using a transaction fee. So in traditional, when they set up these surcharge or these dual pricing programs, it's flat rate, right? So either 3.5%, 4%, whatever the cost is that they choose to charge to pass on, it's a flat rate. There's no transaction fees, and whatever is billed to the customer is what they're charged. So it's a complete pass through to the merchant account, to the customer taking the credit card. So there can't be profits built in. That is a Mastercard and Visa regulation.
So when we're looking at surcharge and dual pricing, walk us through the difference between surcharging and dual pricing.
So one, surcharging is regulated by state. So there are 6 states that do not allow surcharging, true surcharging programs. You have to actually go through a registration with Mastercard. You have to send in the paperwork, the correct paperwork. You have to actually get registered as a company that is surcharging for credit cards. And you also can only do it on an actual credit card. So in today's day and age, just because it has a Visa Mastercard logo on there doesn't mean it's an actual credit card. There are now debit cards, bank issued accounts that are tied to your bank account. And so there's PIN debit and there's also non-PIN debit that you can use those cards for because they have the Visa Master logo. So with the surcharging program, you cannot surcharge on non-PIN debit transactions that are tied to someone's bank account. So anything, it's called the check card. So anyone using a check card, the customer wouldn't get a fee passed on. It's not legal in those programs. The dual pricing isn't technically a surcharging program. You're technically offering a discount for paying with cash is how you do it. So you charge one price cash, one price credit. So it's not limited to just credit cards. So those are the 2 differences between surcharging and dual pricing. You also don't have to go through the full registration on it because you're just getting set up on specific pricing that would allow you to discount anyone wanting to pay with cash.
And when it comes to dual pricing, it sounds like you cannot do it on a credit card. It can only be done if someone pays with cash.
No. So a dual pricing program, if you walked into a restaurant or retail location that was offering dual pricing, then you would, when they go to the register and choose to pay, the register would come up and say, if you pay with cash, it's this price. If you pay with credit, it's this price. So it is technically covering the processing fees. So you're building in the processing fees into the price of the product before it's sold is what it's technically supposed to be.
I understand. So I just want to make sure that was the clarity between surcharging and dual pricing because it's a newer model. Yes. People should understand the difference between those 2. Now,
absolutely. Absolutely.
Let's say someone listens to these things and let's say they're like, look, I have the equipment, man. I bought the equipment or they gave me the equipment for free. How do I switch out of a Stripe or whatever this restaurant is using as the POSs or terminals? Or how do I switch to someone like you? What does that process look like?
Unfortunately, in today's day and age, and this is another change in the industry, is most processors will lock that equipment. So in order to switch, you would have to either buy or have someone provide you with a change of equipment, whether it's a terminal or, for online, changing out the gateway or a retail or restaurant POS. So you would actually have to get and switch out the equipment in order to do that.
So the equipment has to be switched, and that's one of the ways that if some PayPal or Square says, hey, we'll give you terminals for free, they're not really for free. Like they're locked in with that equipment.
Nothing in life is for free. Let's be honest. I mean, we all know, right? Like anyone that's offering it free, they got to be making their money somewhere else. There is a cost, right? These are small little computers. They are not cheap. They have a lot of technology built into them, but most processors have, or a lot of processors have, the ability to hand out free equipment, right? But that's built in, right? In order to do that, they have to make that money back on that equipment, right? So either they tie you into a length of a contract, or if you leave within that certain time, you sometimes build the equipment cost. There are different things written into those merchant agreements that protects them to make sure that they make their money back on the equipment. But there are free equipment programs everywhere. So, free of POS, that you can basically find it if you wanted to. And we have them. We offer free equipment if that's what people are looking for.
But let's say someone is more on the B2B side and they're doing invoicing through QuickBooks, because QuickBooks is also have the Inuit payment, which is notorious, and the fees just keep going up and up and up. How do they say, look, I don't have the equipment. I feel like it's easier for me to switch. What does that process look like for someone that doesn't have physical location? They're either taking payments online or they're invoicing.
Well, I mean, with QuickBooks, Intuit was the only processor that was directly tied into QuickBooks. They're their partner. They did all the processing, and they tended to have higher fees because if you wanted the convenience of doing your invoicing through QuickBooks, there are so many programs out there now. We have multiple that work directly with QuickBooks that can replace Intuit. So instead of invoicing through Intuit directly in QuickBooks, they have software that will sit over those invoices, send them out, take them, update QuickBooks as a paid invoice once the payment is made, so that they can take payments almost exactly the way they are through Intuit with QuickBooks. So we have plenty of those. Anyone doing anything that isn't require equipment, online processing, or, invoicing, things like that, those tend to be easier to switch out. You either make a change on the back end to their current software with the new account information, or you provide them with a new version of their invoicing software, and that can be switched out. So it all comes down to how they're taking the payments.
Now, when we talk about change, people always are very they're skeptical. Change is not easy. It doesn't matter how good or bad it is.
No one likes change, right?
So when someone comes to you, how do you make the change easier? What are do you talk about potential savings? Do you talk about potential simplifying or streamlining process? What are some of the benefits? If you like, I know it sounds bad or difficult, but here's what you do when you go through the change and what you get on the end.
Yeah, I mean, money is everything, right? Everyone's looking to save money in any way they can. And that's something we offer. We do an analysis of their current statements and let them know, hey, with your current processor, you're paying X. With us, this is what you would pay. And we offer them a savings based on monthly and yearly. We map that out for them. And what most people don't realize is when they're with someone for an extended period of time, those fees go up every year. Unless you have someone that you are directly dealing with, that you go over the statements and they show you that they're not increasing the fees, those fees increase over time. So if you're with someone, 3, 4, 5, even 10 years, people are shocked at what they're currently paying versus what they originally signed up for. And that's something we try to help people with, right? We are, when we set up a customer, they have access to us through email, cell phone, every way they need us, so that we can have these discussions, we can go through it, and we can be on top of making sure their rates stay at the lowest that they are. So, a lot of times people go to their local bank and they don't realize that that business is outsourced, and they trust them, but the person they originally signed up with is no longer in the industry, and it's now just become a corporate account. Those corporate accounts will get increases every single year. And it's a little here and there, but it eventually adds up. And people realize after they look at it, wow, I didn't understand that, and I didn't understand, they don't understand how to read the statements. So unless someone's breaking it down with them, it's hard to understand how much you're actually being overcharged.
So it's the main point you want to make here is the fees will be lower. And if you look at your fees across 5 or 6 years, you will be surprised to see how much they've been going up little by little. It might be percentages, but over a time, you're looking at a percentage or two higher, or maybe
significant increases over time. Yeah, and that's exactly what it is. Like it's like, oh, we're going to go up, and they're fractions of percentage points, but 5, 6, 7 increases. The next thing you know, you're paying 1-2% higher than you realized, and that adds up, especially in today's day and age. Everyone uses credit cards. No one carries cash. Companies that were taking 30% credit cards 10 years ago are now at 80, 90% of their businesses through credit cards. And those changes, along with, those fees going up, now all of a sudden becomes, it cuts into those profits. It makes it more difficult, and they don't realize it, right? Things are working, they're happy, they don't even look at it. The money comes in, they know they're getting their money, and they just kind of ignore it. And that's what we're here to show them is, if you deal with an honest company, those fees can be kept in check. We have businesses been with us 25 years because we take care of them. And we make sure those rates don't go up. We keep an eye on it. We make sure that what we quoted them originally, and changes happen on the back end that we have no control over, but our cost of what we charge for our services doesn't change.
When you're talking with some of your clients, and you've been together for 10, 15, 20 years working together, do you see that they start to ask or expand into other areas when it comes to like their financials with you, to ask you about forecasting or CFO stuff or reporting? Is there any other things that a payment provider starts to kind of next to it, or adjacent things they start to support, help, and answer questions about?
I think that, we have, hands-on approach. We talk to our customers on an ongoing basis, so they know the services we offer. I mean, it doesn't mean it doesn't come up in conversation, but they realize we specialize in payments. That's what we do. We can offer other forms of accepting payments outside of just credit cards, like ACH and, e-check, and depending on what you're doing. But they understand what the services we offer. So it's not, sometimes they might ask if we know someone, but they know it's not a service we offer.
And it's always about the payment processing, and only about only when it comes to those fees. Now, when it comes to someone that receives ships globally, and they might say, look, I need to accept like AliExpress Pay or whatever it's called, and there's different global, like some from Europe, Bambora, or whatever these companies are. Does that change for someone that has global payments, that are receiving global, what they do and how they do with the payment processor?
So Visa, Mastercard are universal. So, banks in other countries, whether it be India or Africa or Europe, all have Visa and Mastercard associated with banks and payments. So you're allowed to take payments from other countries through those, but the rates are different, right? Obviously, risk changes because banking laws are different in different countries, things like that. So interchange rates, which are the associated rates that every processor starts with, that Mastercard and Visa put out there, that's really where they see the differences. Those interchange rates would be a little higher on an international card. Chargebacks are run different because different regulations from banking and different countries, things like that. So the risk goes up on those types of cards. So the fees are a little higher, but people understand that, right? When you're doing business internationally, it's a little different than US based. So that's really the biggest difference. We don't get involved in, we offer the services we offer, right? Like, and things go along with that, but we don't get involved in other forms of payment, like extended payments and things like that. That's something they do separate from their processing accounts.
Right, the pay later, whatever those ones are, and stuff.
Yeah, buy now, pay later programs. Yeah.
They're
everywhere, right? But that's actually an additional service they'll offer on top of the credit cards, right? So, yeah.
It's interesting because they're kind of newer and they're popping up more and more. But what I wanted to ask for more like traditional stuff, can you tell us why is AMEX always more expensive? Why is a transaction with an AMEX always higher?
Well, it's changed, right? So American Express used to require that you went directly through them. American Express only worked with one bank. That was it. They had one partner bank. Visa, Mastercard, is offered by every bank in the US, right? So that was one of the different. So American Express was a different program. And it wasn't even a traditional credit card. It was a charge card. So at the end of the month, you had to pay that bill in full. They ran on different procedures, and they set their own rates, but they have since changed, and you no longer have to go direct with American Express. There is now an OptBlue program that offers us interchange rates like Mastercard, Visa, and Discover offer, that we can price it and give them a little bit of savings on the American Express transactions. Their interchange rates are still higher because they all of the card brands get to choose and make their own interchange rates, right? They control what the cost is based on the card type. And a lot of the American Express is really based in the business world, right? Corporate cards and business cards is where you see a lot of the, uses for the American Express. And those are higher throughout all of the major card brands. Corporate and business cards have a higher interchange rate associated. So that tends to skew American Express a little higher because they have a higher percentage of their cards are in the higher categories of interchange rates.
When we're looking at these American Express or the other methods they were talking about, like pay later and stuff like that. Have you noticed, in your experience, an increase or questions around cryptocurrencies as payments, or is that just like it's more talk, but is like in practical, I don't see that often.
It's coming. I just think it's so unregulated. People are afraid of something that's the unknown, I think. And, they're, constantly changing in what it's worth, right? Like from one day to the next. So I think there's a lot of unknowns, but I believe it's coming. I think in a lot of industries, we deal with a lot of high risk industries like, cannabis, and they struggle with payments on their side. So I think crypto is starting to try to gain ground in those higher risk industries, and I think eventually it'll be available. And we're obviously always looking at the new options and what we can offer for services. I'm not sure we're quite at that point where it's going to become mainstream yet. I think we're a few years away, but we'll have to wait and see how it goes.
Few years away sounds very, very close. Now, Matt, what does the future hold? What does the future look like for you and for your company? What are you guys doing in 2026?
So we're actually expanding more into the high risk space. Like I said, we're working a lot in the cannabis and not just dispensaries, but there's a lot of businesses involved, whether it's marketing agencies or other companies that don't touch the plant, and they struggle to get processing, and the ones that do want to help them or work with them charge extremely high rates. So we're trying to let them know there are companies out there that are here to help them and not gouge them just because they're in the cannabis space. So doing a lot in the high risk space, and we're doing a lot with doing podcasts, having conversations with business owners, bringing light to the problems of the industry, and trying to help new businesses that are getting in there with information out there that can hopefully help with issues others have gone through in the past, so that they don't fall down that same path and have to deal with the same issues, whether it's being shut down by someone or not understanding the industry or knowing where to go to get the best program and obviously the best service. That's really one of the big things in our industry, is supporting your customers and being available. And I think with the higher risk spaces, people set them up, know they don't have a lot of options, and just kind of ignore their customers. And that's not really, a great way to do business.
I agree. Now, if someone listens to this, Matt, and they say, look, this is fantastic, how do people get a hold of you to work with you?
They can find us on our website, mnmmerchant.com, and it's spelled out just like it sounds, MANDMMERCHANT.com. They can find us on LinkedIn, Instagram, pretty much, the same ways they can find other companies online.
I appreciate that, Matt. Thank you so much for the time. Thank you for sharing all these things. I hope people listen to it and understand there's more options. Give it a shot, try it, because the fees, they just keep going higher and higher for no particular reason. Just like every time, whatever, they just go higher. So there's options. There's people like Matt that can definitely help. So I appreciate the time and appreciate you sharing all these information. I wish you all the best.
We appreciate it. Thank you very much.